In today's video, we're going to talk about warning sell signals. Wall Street had a bit of a headache in the past trading session. In fact, Wall Street tumbled to sharply lower close as an abrupt sell-off snapped the rally. Also, when we look at stock performance, that was hit right across the board. All sectors were down, consumer staples did the worst, and communication services did the best, but they were all bad. The sell-off was largely concentrated towards the end of the session, and that's not a good thing. Things came down very sharp. Jay Hatfield, a portfolio manager at InfraCap in New York, said, it's nothing to worry about. Stocks were near all-time highs and they hit resistance. But where was that resistance, and could you have got ahead of Wall Street? The answer is yes. I'm going to prove it by traveling back 24 hours in time. If you like this kind of content, please like and subscribe. The main markets were not happy that the S&P 500 came down, and it came down hard. There were broad-based losses across everything. In today's video, we're going to talk about why it's important, and it is. Could it have been predicted? Yes, it could. What's crypto and Bitcoin doing now? We're going to have a look at Onchain and news for the crypto space. And no matter if you're in the stock market, commodities, anything, you must get prepared for what comes next. Starting off, why is it important? It's important for a very specific reason. Unfortunately, when the markets go green, the scammers come out. Please know, I never manage other people's money. The only things that I'm involved with are these things here. We were talking about why it's important. It is important because of Rule 217. No stock market can escape the US's gravity. But can this be proven out in real time? Yes, it can. What do we expect to see when we look across global markets? We've seen the S&P 500, the Nasdaq, the Russell 2000 and the Dow. They came down. They're doing a little bit of a bounce at the moment, but we can also see the Nikkei, the Aussie, ASX 200, and the Hang Seng in China all came down. This would be expected. Expect follow-through in European markets as well. Yesterday's video is a very important one. Please make sure that you look at it. When we were looking at yesterday's video, price action was just below this structural resistance level. With the CTKS method, we know what's happening because we know where the structural support and resistance levels are inside the market. We know as much as the institutions do. One thing that you can see pretty plainly, if we do not hold this structural resistance level and turn it back into support, we are in major trouble. The S&P 500 and everything else could be in for a very negative momentum. The question you always ask in times like this is a fairly simple one. Could it have been predicted? Let's go back to yesterday's video. This is the indicator from the method service. I was explaining in yesterday's video, although we cleared structural support, we were entering a fresh air gap, and they tend to get filled very quickly, and you can see that. But if we rejected or couldn't make our way through this particular level, we would be in trouble. The S&P 500, we've marked up all of these lines with the standards-based methodology since 1871, and the S&P 500 is a Tier 1 chart. It's vitally important to understand. What happened in the next 24 hours? We saw that we didn't even get through that structural resistance level, and we didn't maintain structural support. This is very weak price action. This enables us to understand that these lower levels of structural support could become available. When it comes to price paths, what could we expect next? If we get some positive price momentum, we expect getting back into this structural support, converting it into support, and resuming upwards. If we don't see that, we could be in a lot of trouble. That would open up a very negative momentum here. But when we consider the fact that we've gone to all-time new highs, it does take a bit of time before things can get going again. However, there's something that we should watch. If we see price starting to fail on this structural support level, which is already weak, coming back retesting the underside of this structural resistance area, resuming down, we could be opening up far lower prices. The narrative of the Santa rally could be just kicked off the table. The stock market only trades 5 days a week, and it's very lazy in terms of its opening hours. We can check risk on and risk off activity through crypto and Bitcoin. So what is that doing currently? We can see the crypto market is pretty green. But one thing to always understand is Rule 225. Bitcoin cannot escape the stock market's gravity. In yesterday's video, I explained the directional correlation between the S&P 500 and Bitcoin. That's a very important concept to understand. Another thing that's vitally important, if the S&P 500 sells off, we expect crypto to sell off as well. If the market just does a nosedive, we would expect crypto to suffer as well. We can see the crypto market is holding on very, very nicely, so we need to look at the news and Onchain to see what's cooking. And there's a lot cooking. Today, the spot Bitcoin ETF applicant, Hashdex, released a new Bitcoin ETF commercial. And that was literally a day after Bitwise released its commercial. There's been a flurry of press activity, especially in the mainstream media, and Galaxy Digital CEO says a spot Bitcoin ETF will be approved before January 10th, and that is the consensus. Also, Grayscale met with the SEC yesterday to discuss their spot Bitcoin ETF. And Michael, the CEO, has been very, very busy on Fox, Bloomberg, and CNBC. Please let me know in the comments, what day do you think the Bitcoin ETFs will start to get approved? And will this hold Bitcoin up even if the stock market comes down? But wait, there's more. The SEC also met with BlackRock about the Bitcoin ETF filing once again yesterday. And we can see there are so many meetings that have occurred recently. In fact, the SEC has now met 24 times with Bitcoin ETF applicants. And if you're wondering who those Bitcoin ETF applicants are, there you go. There's a nice list for you. Of course, not all politicians are happy with this, especially Elizabeth Warren. Once standing for the people, she's now standing with the banks. There is so much positive news. Should we trust it? Should we buy on the news or look a little bit deeper into what's going on? When we look at Bitcoin number of active addresses, you can see they've fallen off a cliff recently. Typically what we see is price appreciation in Bitcoin when they start to come up again. Not so much here. There was a little bit of negative momentum. One thing that you will find, I never cherry pick. I just present the data as the data is. But more often than not, when we get a sharp decline and a reversal off that, that signifies increasing prices. So we really want these number of active addresses to start coming up. This is how it looks on a bit of a short-term time frame, but what does it look like on a longer-term time frame? Ay caramba, that's a really big sell down, isn't it? That's a really big drop-off on active addresses. Not something that we would anticipate given all that amazing news. That indeed is the number of active addresses, but what about the number of new addresses? Is that going up? Ay caramba, it's not going up either. What is going on here? Generally, when we see a big fall off like this, it's accompanied with negative price momentum. If you like this kind of content, please subscribe. I'll be looking at this very closely in the upcoming videos. With that said, we need to get prepared for what comes next, and what could be coming next. The only way to really truly understand is to uncover CTKS structure. When we looked at the CTKS method for the S&P 500, we saw that we could have predicted what was happening. The CTKS method is unbelievable. It is literally the world's most powerful smart money buy and sell level detection system. We can see that Bitcoin is a tier 1 chart. It's really important, as is the S&P 500, which we went through just before. Now let's look at these particular lines, this markup of CTKS structure. What are we seeing here? The 43,934 level of structural resistance, and it's not particularly great, has been rejected. Price came through and it's been rejected. Just remember what happened on the S&P 500. If you just paid attention to the news, you would be going all in and more. We're a little bit different on this channel inside our community. We buy at structural levels. We know price is always moving in a wave. It's always going up and down. We seek to get on the right side of the percentage, especially given the fact that Bitcoin has so much incredible structural support below it, especially from the $41,000 level down. Always bear in mind, all markets are intercorrelated and interconnected. Therefore, Rule 225 is really, really important. A lot of people in crypto don't believe this rule until it comes true. Rule 225 is vitally important to understand. A lot of people will say, oh, Bitcoin has decorrelated from the stock market. Please don't believe them. Sometimes things take time to play out, but on average, you'll see from yesterday's video that it's very important to understand where the stock market is going. If you don't, your alts will bleed on you. It's a reason why timing is so important. There's a couple of things that we need to look out at. If we look at total Fed liquidity, we can see Fed liquidity just came down recently. And that is very supportive of the main markets and also crypto going upwards. So just be aware of that. Let's make sure that we keep our eye on this from day to day. If you haven't subscribed, please subscribe. I'll keep you up to date on all of these stats. What about the inverted put-call ratio? The market got very, very bearish in the past trading session. People were going put crazy, and there was a huge spike in puts. If this comes down, what do we expect? Negative price momentum inside the markets, both crypto and the stock market. Please bear that in mind. It's important. The inverted VIX did a cut under. This is not necessarily good news, and it went ballistic as far as timing is concerned. What does that mean? It means if the VIX is spiking, there's so much volatility inside the market and is typically negative. It doesn't always follow. Sometimes we can get pushes up and inside crypto, and this was largely the ETF coming through. So just bear in mind that we could get some divergences, but nothing can escape the stock market's gravity. Other countries' major indices cannot escape either. A lot of people think that if it doesn't happen instantly, the threat has passed. It's not the case. Sometimes things take a little bit of time to play out. Rule 241 is vital to understand. Timing done right is done early, and you want to do your timing early wherever possible. When we look at the major economic events that are hitting the markets, there's quite a few things that are occurring. You might notice GDP growth rate is coming out, and not too long to wait for that one. Perhaps the GDP has tanked, and the thought of a hard landing is becoming more and more probable. That could explain the sell-off. Smart money always profits first. That's why we're a smart money community. Now let's have a look at what smart money looks for to understand where price is going. High impact economic data releases are really important. They track them, as well as government policy and data. We're tracking these as well. The Forex market and the bond markets are intercorrelated and interconnected, as are the commodities market, stock market, crypto, and price reality. When it comes to price reality, we do not do recent indicative price, which RIPs our money. Instead, we look at CTKS structure, which shows us the X-ray vision of financial markets, just like what it did with the S&P 500. For the members of the Masterclass, as well as the CTKS method service, I've popped up the CTKS timing cheat sheet. One thing that we know, the S&P 500 was coming into structural resistance. It therefore went down when it hit it. But just keep in note, the main overall trend is positive, but there's a fresh air gap, a negative one approaching. If we see follow through and negative price momentum, we would expect quite a sell-off. To substantiate a sell-off, we would want to see strength in the DXY, strength in the dollar-yen combination. We're seeing moderate strength in the DXY as well. It's had a negative trend for quite some time. We'd also want to see the 2-year and the 10-year start to rally and turn green. Don't forget, we go long at spot, so we're looking for the opposite of these things. To ensure that the markets keep on rallying, we want the Aussie dollar and the euro dollar to keep outperforming. One thing that's really interesting is gold has hit structural support, and how. There's so much of it down there. It's going from a consolidation case into a positive case on both the momentum side and the intermediate trend. Where gold goes, silver usually goes first, so just keep that in mind. The VIX had a breakout day, and by breakout I mean it broke the markets. One thing to have a little bit of pause for consideration, junk bonds has done a positive crossover. This is really good. If junk bonds maintains its positive momentum inside the bond market, we could see the S&P 500 and the Nasdaq start to repair. That will repair all the stocks and also add fuel to upward price momentum in crypto. A lot of people say, "Oh, Ken, I just want a simple answer. Is it going up or down?" In an ideal world, the market would just be simply a light switch. It's either on or it's off. But how could on and off explain consolidation? Please let me know in the comments. Financial markets are really, really complicated. It does take a bit of time to wrap your head around it. And if you don't like complexity, don't worry, it becomes more simple over time. One thing that we've seen, and this is a good piece of fuel that could fire an upward price momentum surge in the S&P 500 and junk bonds, and of course total crypto market cap and Bitcoin. We've seen the probability of an ease increase from 10.3% yesterday to 14.5% today. This is good. This puts negative downside momentum on the 2-year and the 10-year. That's what we want to see. That's going to help gold, silver, and everything else rally. Government economic data should not be ignored. Yesterday, we saw stocks, the Fear and Greed Index, register 79, which was extreme greed. When things get extremely greedy, usually people get slapped across the face with a wet fish. We've seen the optimism come down a little bit, and we would expect that. Optimism goes nuts, goes into extreme greed territory when the markets rally up on both momentum and the intermediate trend. And when they start to retrace, even if it's natural and normal price action, the extreme greed falls to greed and can go neutral. We've seen a likewise decrease in the Crypto Fear and Greed Index. It's very good even if you're not in crypto, and hey, you should be because you will be in a couple of years anyway. Why not do it earlier? But the concept is, when you look at crypto, you're looking at a very risk-on and risk-off asset class. It's very risk-sensitive. It can give a pre-warning on what the main markets can do. When we see Bitcoin, it's currently under positive momentum, and it's not looking too bad. Total is just consolidating at the current time, just a little bit positive. Ethereum has had its share of problems, and a lot of people think that's because Solana is just killing it. Solana is doing really, really well, and when you understand the structural levels of all of these charts, you'll get X-ray vision in a way that you cannot believe. Your timing is really important to master, and if you want to try it out, there's a free printable template at ctksmethod.org. Let's get into it. The first thing that we do is to mark up our CTKS structure first. When we look at something like the S&P 500, if we have our structural indicator on, which marks up all of price since 1871, this is not recent indicative price, this is all of price. These accumulations of dotted lines called SLs or Stanfield levels give us a very good guidance on where the market may hit a ceiling. And I explained this in yesterday's video. This was a bit of a problem and we were expecting resistance. When you see more weakness than should be occurring, for example, all of this structural support, which is quite strong, got pushed down through and the S&P 500 ended up down at this level, that is not good. That shows market weakness. We don't like that. Please make sure that you watch yesterday's video if you haven't already. It's so good. It will lay the groundwork for understanding 2024 price action. One thing that we see all the time is very important to have X-ray vision. You don't want to stand inside the laser beam. Therefore, what is the X-ray vision for Bitcoin? We can see Bitcoin is rejecting this structural resistance at the current time. This weakness in structural resistance means that lower levels of structure are very likely, and especially what's happening inside the S&P 500 at the current time. The futures have indicated there's been a little bit of a bounce. If junk improves and the VIX comes down, that's going to be fantastic news. Let price be your guide. How do you draw up these levels? How do you know how to do it yourself instead of just popping on the indicator, which is also something that you can do? These CTKS method levels are standards based through level 1 and level 2 standard certification. You can learn it once and apply it to any price chart. The timing cheat sheet is combined with all of the tier 1, tier 2 and tier 3 charts. You can see today we've talked about 2 of the tier 1s, the S&P 500 and Bitcoin. Imagine when you unleash your X-ray vision on all of these 27 charts. And if you would like the indicators that I use on a daily basis, even across these 27, you can just go to ctksmethod.org. Getting your X-ray vision is incredibly important. I want to thank you very much for watching and for being part of our global family. If you want the no BS rundown on stocks, commodities, crypto, and everything in between, you're in the right place. I don't have a story, I simply look at the price action. It takes many decades to do that, and I love sharing my experiences with you. Please let me know, where do you think the stock market and Bitcoin/crypto are going within the next 24 hours? It's a very important question to understand and to think about. Have a great day or night ahead, my friends, and Kate and I look forward to catching up with you again tomorrow. Bye for now.